Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hey everyone, and welcome to the RIA Edge Podcast. This podcast is, as you know, my chance to speak to executives building the modern independent wealth management firm. Firms that are, in our estimation, professionally managed, growing faster than the average RIA, but doing so in a way that's sustainable and not just wafting upwards on AUM and market appreciation. So in other words, firms that are growing by design and not by default. We want to hear about their strategies, how and why they make the decisions they do, and to get their views on where the wealth management industry is headed. And for this episode, I'm pleased to be joined by David Hefty, who is the CEO of Credent Wealth. David, thanks very much for joining us.
Yeah, thanks, David. Happy to be here.
I'm excited to have you here because I think Credent Wealth has taken a unique path forward in the RIA space. Kind of a unique story and a pretty aggressive growth story over the past couple of years. I think probably more than a dozen acquisitions or partnerships in the past couple of years, and I'm excited to talk to you about it. But for folks who don't know your story as well or know the firm as well, how do you describe Credent Wealth, and how would you describe it to a industry colleague, maybe as opposed to a prospect?
Well, thanks, David. Yeah, happy to share with that. And I'll tell you, it's you talk about that growth over the last couple of years. I always like to joke, it's those 2 years were 25 years in the making. So it's not like, it just happens overnight, right? So, but no, when we talk about Credent, it's pretty easy. I'm very passionate about what we put together here. And so it's a forever firm, striving for excellence in investment solutions, planning, and service. And when you hear that, you say, well, that's not the first time you've heard something like that. And so I think maybe over the course of this conversation, we can unpack what do you actually do to live into those words. And what we like to say here at Credent is to propagate the mission. And so how do you propagate that mission throughout our growth cycle?
In one of our coverage of one of your deals recently, I think we quoted you saying that you don't consider Credent an aggregator, you consider yourself an anti-aggregator. What do you mean by that?
Yeah, that's right. One of the one of the center pieces of our firm and our growth strategy is full assimilation. And so as the industry continues to just mature and evolve, as we see all this consolidation, right? So all the consolidation, and we know all that, we don't need to talk about all those stats. It's just, we're all living in it, but there's nothing anybody can do about it. It's going to happen. And so as you approach it from that lens, it was really about, okay, well, there's a lot of ways to approach the consolidation. I'm not going to sit there and argue one's better than the other. I'm not going to get into that argument with anybody. I just know what we do. And our approach to this is full assimilation, which is really built around what we call the Credent experience. So it's a fee-only fiduciary standard with everything we do circling around the client. And again, those buzzwords are common, but what we typically find in our industry is advisor-centric models, not client-centric models. And that's you got to have a lot of humility to be able to peel that back and take an inward look. But when you do, that's typically what we find, right? And so to be that contrarian, it was truly to have that assimilation model. That's why, we don't stop at aggregation. Then there's integration. That final step is assimilation. And we find that, again, I'm not going to say one's better than the other. Everybody has their niche inside the consolidation movement. Ours is assimilation.
So, we said probably over a dozen deals in the past couple of years. Characterize for us who these firms are that you're bringing on board, that you're partnering with. Relative size of the firm. I know Credent overall is probably about 3.4 billion.
Yep, exactly. That's right where we are today.
Yeah. So the general size of the firms that you have been bringing in over the past couple of years, probably in the $300-400 million range. Is that accurate?
Yeah. So when we go to be mindful about how we do that, we look at a couple different ways. One is when you have to launch a team. And so are we launching a team, or are we combining the acquisition or the merger into an existing team, right? So those are the very first kind of question to ask, right? What are we trying to achieve here? And so when we go to launch a team, it is right around 350, 400 million. That's about as small as we can go to launch a team to sustain our client experience model. And then so anything under that just simply tucks into an existing team.
Got it. And needless to say, everyone takes on the Credent brand.
Yeah, for sure. So we do have, depending on the advisor, right? But we do have some flexibility in how we assimilate on our timeline over the first 2 years. However, even with that flexibility of the last 13 transactions that we've done, 100% of them have assimilated day one into the Credent brand and client experience. And so it's always funny, even though we give options and some flexibility, once the advisors take the time to understand, the why behind everything, and that takes time. But once they get there, they all so far have chosen to do immediate assimilation. So yeah, it's brand, operating system, and then ultimately again, the assimilated client experience, which is the center of what we do.
Yeah, and all the advisors on the same tech stack.
Yep.
Accessing the same model portfolios, I think, that you build in-house. I think you have some in-house portfolios that you use.
Right. So when we think about just integration, right? So integration is going to be financial, compliance, HR, right? Our benefits packages, just those types of things are going to integrate. And then as you go into technology, we have, again, if someone's going to slow walk it, we allow some options inside the integration on tech stack. Again, even with those options, I've yet to have an advisor ever do it, which is great, right? They love the model and they just want to get into it right away. But again, I at the speed of which we are growing, we know eventually we're going to come across somebody who wants to take a little bit of a slower path. So it's full tech stack integration with, portfolio accounting, custodians, CRM, just all, planning, all the stuff that as advisors we all do. And then again, that very, very final step is the assimilation. And of course, assimilation can't take place without the proper, we call them our dynamic teams. And so you have to build a dynamic team to be able to actually deliver the Credent experience. And that's a combination typically of existing team members that our new firms have brought and external hires is how we round out those teams.
How would you characterize the structure of the organization now? How many employees maybe in the quote unquote home office or in that back office capacity, touching all the advisors out there versus how many advisors out there in the field, client facing?
I don't have those numbers completely memorized, but I know we're somewhere between 105, 115 total team members at Credent. Of that, roughly 30 client-facing advisors. But of those advisors, there's 8 team leads. So again, to be an advisor, that title alone doesn't necessarily define the roles and responsibilities on a Credent dynamic team. And so each of those teams, there's 8 teams. So you have 8 team leaders, which are client-facing advisors. And then there's another 20, 22 financial advisors that maybe have better expertise in financial planning, tax, estate, just ERISA, all the other expertise that we want to be able to bring to the table for our client base.
So that's interesting, and I did want to get into the the 20 years that were leading up to the 2 years of accelerated growth to kind of just take a step back and get the full story. But you're bringing up the assimilation part and the way that you structure the teams around, it sounds like specialties or capabilities or skill sets. Is this in your mind when you go out and partner with other firms or you find other firms to bring in? Are you looking for specific gaps maybe in skill sets that the overall Credent team can use? Or how are you evaluating potential new partners when you come across them?
I wish I had the luxury of doing that. I will tell you, it's a very competitive landscape. And so if we can culturally align with the lead advisor that built the firm, built the practice and seeking succession, that's where we start. So then what we do is I suppose to your question, we kind of reverse engineer that question. And we go in and do all of our assessments just like we would with any new hire. We have, there's 5 key pieces of our culture document that bubbles up to our culture statement. And then in our onboarding process for any new team member, whether it's through acquisition or just looking for a new role for the firm, we bring all those individuals through that process. So we give them the time, the space, and the ability to experience that just like anybody would. We're always committed to keeping as much of that good talent as we can. I mean, we're very motivated to keep that talent, but really it's about making sure those individuals, right people, right seats. I know everybody talks about that. We actually do it. And so once you do that assessment, it's a 3-tiered system. So it starts with the client experience model because clients are first. So what are we delivering to the clients? And there is 0 exceptions to this. We have never made an exception to our client experience model. So if we don't have the right people, then those people need to be moved to different seats. And pre-existing relationships just aren't necessarily a factor that we look at. It's really about the right person in that seat. Because again, we want to build a forever firm with sustainable growth, right? And so
how would you define the Credent client experience model?
At the surface level, so for, I just think about what's public and what we market to, right? It's the onboarding process that we go through. So it's a deep dive client discovery process to come on to Credent. If you don't go through the process, we will not accept your money, right? So the clients, the prospective clients do have to invest those 4 to 6 hours into the onboarding process, or we will, simply turn them away. And so that takes a special type of advisor to lead through that. That is much more around behavioral finance. Not a lot of numbers are being discussed. Let's just put it that way. This is really about human emotion and the core beliefs of our firm and making sure that the clients are matching up those core beliefs. So that's how the experience for clients start, whether they're just coming on organically or whether they're coming on through acquisition. All clients that come into Credent come on the same way. And so our lead advisor, we call that our wealth advisor, is going to lead that part of the process. Of course, they're paired up with another advisor, which we call a wealth manager. They're typically either a JD, CPA, CFP. That individual then carries the expertise for the excellence in planning. And then they also champion the ongoing service. And so the excellence in service, they're supported by client service associates, financial planners, client care coordinators. And so they have the support team to support that wealth manager. So they can really live in their area of expertise to deliver upon what we kind of feel are table stakes, right? Goals-based planning, comprehensive planning, making sure tax planning is done, estate work, just the stuff that most firms that we compete with all provide. And so that right expertise and the right support model, they have to make sure they're team-oriented individuals. If whenever you get somebody that thinks they have all the answers, they typically don't last long at Credent because we know that's just not true. And so we're looking for people that like to collaborate and really solve problems for clients. Our wealth advisors then really lead the delivery of our investment platform because part of our value prop of our financial advisors is they do not manage money. They spend time getting to know the clients, solving all their problems, and making sure they can successfully get across that goal line for whatever their goals are. We have an in-house investment team with our CFAs that run all of those strategies, and they sit in front of Bloomberg terminals all day. And so we let them manage money because that's what they do, and they're passionate about that. I got to be honest, I've been a financial advisor for a quarter of a century. I've never met an actual, what I consider a financial advisor that's passionate about investments. They're usually passionate about people. And so we want to make sure the investment expertise sits where it belongs, and that's with individuals that are passionate about being a CFA and being disciplined in the investment space. So our wealth advisors translate the communication, right, of those strategies to our clients, and then it's a very high touch, ongoing model. A lot of outbound, proactive phone calls, meetings, experiences, and we mix all that together because again, anybody you'd interview on a podcast will probably say, hey, if we put a financial plan and investment plan in place, the only way it's going to not work is if the client screws it up. I mean, that's pretty common across the financial services industry. Clients are usually their own worst enemy. And so we really want to invest that time to build that bridge of trust so that way our clients can be successful.
Mm-hmm. Keep them from doing the wrong things for sure. It strikes me that when you're making partnerships with firms that you're bringing into the Credent Wealth team that Because in my experience, many financial advisors do have a passion for the investments and kind of lead with their investment ability and still, have that mentality of, I'm the stock picker, I'm the portfolio guy. You have to find advisors that are willing to give that up, have the humility to take their hands off the wheel in a way.
Those advisors are out there. And we come across them. We also come across not only that, but multi-generational businesses, right? Where maybe it's even not the founder, it's the son or daughter that's now passionate about that. And again, when we come across those opportunities, what our experience has been is when you really start to peel back the onion on those advisors, or maybe that next generation advisor that's in there that's passionate about investments, we ask them simply, if you could just talk to financial advisors about investments, would your career and professional satisfaction increase or decrease? I've never had someone tell me it would decrease. They're all like, you're going to pay me to just geek out on investments and talk to advisors. And I never have talked, you swear to me, I never have talked to a client again. And I'm like, yeah, we have roles for this. And actually they're hard to fill. They're really hard to fill, to have someone that super knowledgeable on investments, but also can kind of, they have a high level of communication, right? That's unique. And so that's where those individuals usually gravitate inside of our, when we start to assimilate. They actually don't want to work with clients. They just feel like they have to.
Yeah.
Now, some of them are better than others. We'll put them on Zoom meetings or whatever, but, again, though, it's always your best foot forward, we got to make sure it's excellence in the experience. 100% of the touch points with the client must be excellent. And so, as long as we don't sacrifice that.
That's good. That's it's almost, letting folks play to their strengths in a way, right?
Absolutely.
And that is good for everyone, I guess, good for all the stakeholders. I did want to go back just a little bit for that 20 years that brought up to the 2 years. Can you just briefly kind of do the deep background? Where'd you start? Who did you partner with first? I know that there was a merger of some firms back in, I think, 2018 that kind of kicked this whole thing off. But you tell me.
Yeah, I'll give you the thumbnail sketch, and then you can feel free to dig into any of these if you want to know more. I mean, just right out of college, my wife, Stacy, and I, we're married week after commencement, right? So we get married. We both start at a brokerage firm, do that for a year. Both of us got recognition nationally in that brokerage firm. And we always knew we wanted to have our own business. I mean, so we were pretty lame in college, right? Instead of going to the bars, we would go to back in the 90s, you had to go to a computer lab. So we would go to the computer labs and we were working on our business strategy our senior year. And so that's what we were doing. And we were bouncing those ideas off of our professors. They were giving us referrals to individuals in the space. And so we were doing all of that our last year of college. And
so you knew wealth management was where you wanted to go in college.
Yeah, it was. It was, a little funny side story. I thought I was going to be a commodity trader in Chicago Board of Trade and just scream at people in a pit. I went on a high school field trip and I thought that's my dream job. And then later I found that I don't know. I gravitated towards this, right? Mm-hmm. And so, but yeah, that's so we knew we were going to do that. And so, but no, nobody's going to back us, right? And so we go and we get in the space. We spent a year at this large firm, national firm, did really well, won all the, won trips, got plaques, whatever. And on our 1 year anniversary, we resigned and launched our first business at the age of 23. We didn't take any clients, actually, paid back some training costs, saved every dime we ever made, and invested that to launch our own independent firm at the age of 23. Big independent broker-dealers wouldn't look at us, right? Didn't have any clients. And so by 2002 is then when we jumped on with LPL as just an independent advisor. We had crossed over their minimum. And then I think I was ranked in the top 50 of all LPL advisors by the time I was 29. And that was just one client at a time, right? We just grew the business one client at a time, and but never really changed our lifestyle. So just kept squirreling it away, and allowed us to always just reinvest into the business. We were always doing very, very heavy reinvestment, which allowed us to continue our organic growth faster. During the Great Recession, we actually, from 2000 and the end of 2008, so 2009, through 2012. Again, we were already doing over $1 million of recurring revenue, and we tripled the size of our business during the Great Recession. So I found that the absolute easiest time in my career to grow was during that era.
People were looking for advice.
Yeah, they were. Honestly, David, what they're looking for is authentic leadership. And what we found was, and that's where we really discovered, it's one of our core values today for our entire firm. So like every team member has to, exhibit all 5 of these core values. But one of our core values is authentic leadership to this day. And I think we really learned that during that era, where if you just be honest with people and also just connect with them emotionally about their money and just acknowledge, yes, this is hard. Yes, this is the worst economic crash since the Great Depression. Like, let's just establish this up front. But that's not a reason to hide. It's not a reason to, recoil back in your life. Like, now's the moment to make some bold moves. And what we find is investors won't do that on their own, right? They need someone to lead them into these bold decisions. And we just found ourselves to be the right people at the right time in the market cycle. So amongst advisors, got some, national recognition, which means we had an inundated inbound request of, how do I optimize my business? How do I do all these things? And so at first it's kind of fun. And then it's like, this is super annoying. These advisors all have to go away. I have a business to run. And so, as you can already imagine, we turned that into a business. And so we launched our consulting division in 2016, where we would do practice management, tech stack consulting. And then, of course, we managed all of the portfolios for other RIAs. So we started doing that 2016. And then in 2018, our largest consulting client was going to sell his business, and he had the big cardboard check, right? Back in the day, right? 2018, it doesn't seem that long ago, but a 3x gross revenue check was top of market. I mean, we all wish it was still there, right? At least the buyers all wish it was still there, but those days are long gone. But so he had that big cardboard check, and I'm like, I don't want to lose this client. I need to figure out what to do. So that became Credent Wealth Management. So Stacy and I, our firm, Hefty Wealth Partners, we rolled it into Credent Wealth. We formed Credent Wealth, rolled our firm, and then 2 other large RIAs. We rolled all that together. And so when Credent was born, it was born with $900 million in assets. And then we've been able to organically and inorganically grow ever since.
We talk a lot about where the outside investments are coming that are kind of fueling this M&A boom and the mergers and the deals. You had made a deal with Crestline Partners that's unique in that it's a private credit facility. You did not sell equity ownership. Right. Tell me about that and the decision to structure the investment that way and how it benefits you and why you made the decision.
Went to market. And again, not a unique story. A lot of firms that go to market share the same story, but so you have 19 offers, and we start funneling through all the offers.
These are offers to invest in the firm.
Yeah. So it's everything from just strategic acquirers to insurance companies, private equity, family office. I mean, all this stuff's coming in, right? And so you start to evaluate all of that, and then Crestline positioned it with a couple different offers. One, because they do offer private equity offers as well, and so they put that on the table. But then they also put in basically 2 bids, and then the second one was just pure private credit. And I got to tell you, at first we really kind of brushed it off to the side. I mean, we laugh about it now with them, but we really brushed it off to the side because we look at what everybody else was doing, and we thought, well, if everybody else is doing this, well, why would we do something different, right? Like, I don't want to reinvent the wheel here. And so we started exploring all these private equity deals. And again, this is not an anti-private equity speech. I think private equity is absolutely necessary for the healthy growth of all RIAs in America today. If the RIA space is going to remain relevant and grow, we have to have private equity. So this is definitely not a story to be anti that. But just our journey is one of which we were looking at what we were trying to solve. We had a couple of unique things that we're trying to solve. And with private credit, it just made sense. And so that way, our capital table is today still owned by the advisor firms that have come in. And it's a single economic class. So every advisor that has come in is enjoying all of the appreciation of that. And so, of course, as those listening understand, right, the appreciation of that equity far surpasses any type of check you can get when you go to sell. And so our advisors are still enjoying that to this day, and private credit allows us to do that. As we go and the advisors that do seek large upfront cash payments, we're at the table. We have the ability to do that and to compete against any firm that has private credit. And so that has not only fueled our last acquisition that we did, but we now have 12 other acquisitions that we are sorting through. A few of them are already under LOI, and all those announcements will come out throughout the rest of the year. But it's been a really great partnership. So we have that full control and autonomy to continue to build scale, to stay a forever firm. And if you really go back to why private credit, that was the answer. We knew that we wanted to grow our firm to a level that it would really, I mean, we're almost there. We'll pass it by the end of this year. By the end of this year, there would only be about 3 or 4 strategic acquirers in America that could even entertain a bid for us. And so that's where, if we're going to truly be a fee-only fiduciary and hold ourselves to the highest self-imposed standards in the industry for advice, we're GIPS compliant. We have 12 years of GIPS certification on our investments for a client composite, also very unique. I mean, so just to hold ourselves to the highest standards and to propagate that mission nationally, we knew we had to get to the size that essentially no one could buy us. And so then at that point, you would then go and partner with strategic investments that believe what we believe and want to go alongside of us to have a very solid return for their investors. And we will welcome that graciously when that time comes.
So you're not negating the idea of taking equity or selling equity or at some point in the future, but the private credit facility is going to get you there. Absolutely.
And again, I know every firm has their own story. So this is just our story. We were able to see with those other 18 offers, or I guess other 17 offers, because Crestline gave us 2, those other 17 offers, that even the minority stakes, that everything always looks beautiful in an LOI. It's through the due diligence process that you find that you lose more control than what you think you're going to lose. So a minority stake doesn't mean you maintain control. So we knew if we were serious about building a forever firm, we had to take this step. If we weren't serious, we would have gone a different direction.
Why do you think more firms don't take that option?
Well, good question. And I've asked that. So I think about the different trade conferences I go to and my peers amongst the space that we sign NDAs with each other and talk regularly. So I asked that question, right? This is not scientific by any shape of the imagination, David. But what I have been able to discover through conversation is I believe some of them would have, it just wasn't on the table. I think as the private equity space has gotten so competitive within the consolidation of wealth management, those firms themselves are looking for unique differentiators to get their foot in the door, right? So think about my own situation. If I like my private credit company, the path of least resistance might be to use their private equity division. Now, I didn't sign anything that requires me to, but you do form relationships, right? So I do believe more and more private credit offerings will come to the table because that's the way that those firms are differentiating themselves to work their way into firms like us.
Interesting. That's interesting.
But again, I got to tell you, that's just David Hefty's thumbnail research. You'd have to really kind of dig into that with some of these PE firms to get the real juice there.
And I know that we're up against the hour here. It's I'm going to get the hook here in a minute, but did want to ask one more quick thing. Your ambitions for Credent Wealth. Tell me where you are in 5 years.
Sure. In 5 years, I'm very confident we'll be passing the $10 billion mark of assimilated assets. Just actually this year, we did launch the ability to just integrate, right? So I believe we will start to see advisors that are not ready to completely hang it up and exit. And so our integration platform, I could see it in the next 5 years easily, probably at the $5 billion mark. I will tell you though, David, when we're talking in 5 years, I'll never tell you I'm a $15 billion firm. I will tell you I'm a $10 billion firm with $5 billion on the side. That's the part, and I think our industry, it's crazy confusing for advisors. They go and look at these firms and they post these huge numbers, but when you actually look inside of them, who owns the economics? Mm-hmm. And the economic construct is so bifurcated all over the place. And again, I'm not telling you there's a right or wrong model. Just want to really highlight the differences.
Tease that out a little bit for me. I think I know what you're talking about. You launch an investment platform that other advisors can use. Do you consider those your assets under management? Maybe not. It's a different division. And tease that out a little bit for me. How you see that bifurcation?
In terms of your ADV, right? Yes, assets under management, but who owns them? Who owns the economics? And it's never the RIA. It's the advisor that's the 1099 contractor on the platform. I've even seen W-2 models where the W-2 advisor owns the assets. I mean, this is crazy town. This makes no sense at all to me in terms of a business construct. It's a very advisor-centric model, and it's like this race to just build size. But our focus is on the client experience, and helping hardworking Americans that earn more than they spend and value our advice to reach their goals. And so, but what we know is we got to play ball. And so this year, we launched that integration platform. So the advisors that are more than 3 years out from hanging it up, we'll do a minority stake, or we'll just let them sit there and integrate and service them, much like an aggregator would, to be honest. But again, it's not an open platform. Like, we just don't let anybody on it. It is literally only those. They're probably going to be north of the age of 60, 65. They're going to be older than that age, right? And they're going to tell me they still have 10 years to go. Okay. Those will be the only advisors you're going to find on that platform. We are not I always call it professional babysitting. We're not in the professional babysitting business. We are here to be the succession planning firm of choice. We're going to continue to work with men and women that have dedicated their lives to serving others, and we're going to help them maximize the value of their life's work. And all of our solutions are pointed towards that, but it's pointed towards that in a way that we will never compromise the client experience. And so that's, in a nutshell, that's Credent Wealth.
That's fantastic. David, thanks very much for joining us. It's a fantastic introduction to Credent. I really appreciated the conversation. I learned a lot. Thank you.
Hey, appreciate the opportunity of coming on your show, David. Thanks for everything that you do for the industry as well. You are clearly a thought leader and big advocate for wealth management, and being in the space. I want to make sure myself, my peers, we appreciate what you do for wealth management as well.
Well, thank you very much for saying that. I do appreciate that. And thank you very much to the audience for listening. This has been the RIA Edge Podcast. Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.